So, making money from property, becoming a property investing or investing in property, what does it actually mean? Well, there's many ways to skin a cat. So let's go find out. So, property investing, let's have a look at the two different things that it actually means to invest in property. It sounds pretty obvious from its name, but what I find is that there are two camps, really two types of people who invest in property, and it kind of like determines their strategy based on what type of person they are. The most typical way to invest in a property is to buy low and, of course, sell high, right? Just like anything else. Sell high. It's a funny H, but there you go. And that is really what most people do. They'll try and buy a property here. Let's say this property here is $100,000, and they're going to wait for some time. There is a little bit of waiting involved. And then let's say after 2 years, they sell for $120,000, making a $20,000 profit. Is that investing in property? Yes, it is. Does it require a lot of money? Yes, it does. And that's where the banks come in by lending you money. It helps you get a better return, as you've seen in other videos. So that's one strategy. What's the other way of investing in properties? Well, it's also buy low, sell high. That's the ultimate goal, but it's going to be buy low and then make money from day one. Right? Day number one. DAY number one. How does that work? Well, let's say we're buying a property for 100K and we're typically going to rent that property out. Let's just say we rent it out for $1,000 a month. I know that sounds like a lot, but hey, there we go. For our example, $1,000 a month. That means $12,000 a year we're making, or very simply, it's called a 12% yield. It's a gross yield. That's how much we're receiving from the property. And that's how other investors look at real estate. I put my money in and I want to make money on a monthly basis. Not that the buy low, sell high crowd doesn't do that, but by not focusing on the make money from day one or the make money from cash flow, it kind of like determines they can buy properties that are off plan. So we see a lot of these buy low, sell high, or what I like to call equity growth investors. They buy off-plan properties, that the properties are under construction and will be ready after a number of years. So there's no way to rent them out and make cash flow. So by property investing, you're using your capital, right? Whether it's all of the property price or you're just putting some of the money in and taking a bank loan, and you're hoping to make a return on that money either by waiting for the price to go up or by making cash flow on a monthly basis. And obviously this crowd, the buy low, make money from day one crowd, obviously waits for the price to go up and obviously sells at some point in the future, because there's nothing wrong with selling. Maybe in future videos we'll talk about when is the right time to actually sell a property. But for now, those are the two main ways of making money or investing in property. So there's a glimpse of the two different types of mindsets or people who invest in property. Buy low, sell high, or invest for cash flow. I'm a cash flow investor because it means there's lower risk in my investments. I'm not so open to market fluctuations. But of course, there's nothing wrong with gambling, providing you can afford to lose the money, because markets do turn both down and up. So just be careful and choose your strategy wisely. And as always, good luck with your investments. I'm Sunil.